Hey guys, Aalok here. So price just ran through the buy-side liquidity above 25,437.90. We've got a new day opening gap sitting below current market price, and that's likely to act as a draw on liquidity. I'm not jumping in yet. I want to see a proper market structure shift, and I'll wait for that 10 AM IST macro time window to line up. That's when things usually start to show their hand. Until then, patience. Right now, price is reaching for as much liquidity as it can, pushing higher, trapping traders who rely on basic support resistance levels or textbook harmonic patterns. I've seen it firsthand. Even my own friends get caught in these moves, never thinking to short a market that's aggressively rallying. But this isn't strength, it's engineered. I will stay patient, wait for a clear market structure shift, and once that confirms, I'll look to position short targeting the draw on liquidity below. Price is continuing to push higher, and it's obvious what it's doing. It's not about strength, it's about engineered liquidity grabs. Every little breakout is pulling in more retail longs, more people chasing green candles thinking the trend is strong. But in reality, it's setting up the perfect trap. This is classic, taking out one liquidity pool at a time, hunting stops, and fooling traders who are using simple support resistance, or stuck in patterns that look great on paper but never hold up in live conditions. Right now, I'm not interested in trying to catch a top. I'm just observing, waiting for that market structure shift. Until that happens, it's just liquidity engineering. Once that shift comes, especially around the 10 AM IST macro time window, that's where I'll sharpen my focus. If the right setup aligns, I'll look for a short, targeting the draw on liquidity sitting below. It could be the new day opening gap, or a clean volume imbalance, but the key is to wait. No FOMO. So till then, I'll stay flat, patient, and focused. Let the amateurs chase, we hunt with precision. So like I said, price is aggressively taking out buy-side liquidity, and this isn't just random volatility. It's precision. It's manipulation with purpose. What the market is doing right now is what it always does when it wants to engineer a reversal. It climbs higher not to continue trending, but to clear out every weak-handed short, every retail trader who jumped in early thinking it was too high to buy, and now they're forced to cover or flip long right at the top. Most retail traders see green candles and think, bullish momentum. But they don't realize that momentum isn't created by strength, it's often just stop runs, thin liquidity, and algo-driven inefficiency. That's why I don't react emotionally to price pushing higher. If anything, it confirms my bias: the higher it goes without structure, the more likely it is to reverse. Right now, I'm staying calm. No rush. I've learned, through experience and pain, that chasing entries just because price is moving is a fast way to lose capital. I want my setup. I want that market structure shift. Once price breaks down, gives me a displacement, and then pulls back, that's where I'm hunting. That's where the edge lives. And you'll notice something: timing matters. I'm not just waiting for a structure shift, I'm aligning that with time. Around 10 AM IST, that's when things usually start to unfold. It's when volume picks up, Asia starts fading, and we get real intent from the market. That macro time window is key. I don't care what any indicator says. I'm not staring at RSI or MACD. I'm reading price, structure, liquidity, timing, and the narrative behind it all. ICT taught this, and the deeper I go, the more I see the same concepts play out over and over again. Another thing I'm watching right now is where price doesn't go. That's important. If we're stalling near a previous high, consolidating just under an old liquidity pool, that's a sign. Smart money doesn't always make things obvious: they'll hover price, create indecision, and then spike it when everyone's least expecting it. So for now, I'm just building my narrative. I see where the buy side has been taken. I see where the draw is likely to be, below, at the new day opening gap or a clean imbalance. And I know retail is stuck long, thinking this is a breakout. That's why I'm getting ready to fade it. But again, not without confirmation. Not without structure. I want the shift. And when that shift comes, I'm ready. I'll scale in with precision, one leg at a time. Not full size right away. I'll manage risk, and more importantly, I'll manage time. If the move doesn't happen within my session window, I'm done for the day. I don't chase late entries. I don't trade desperation. I trade setups. This mindset didn't come overnight. It came from taking losses, blowing trades, and learning the hard way. But now I understand, the real game is liquidity. And the winners are the ones who wait for price to show its hand. So to sum it up, price is running higher to engineer liquidity. I'm watching for signs of exhaustion, market structure shift, and confirmation during the macro time window. Once it all aligns, I'll plan my short, targeting the draw on liquidity below. Till then, I'm just observing. Letting others make mistakes while I wait for precision. Alright, now that we've got a confirmed market structure shift, everything changes. Price has shifted away from its bullish delivery, and what looked like aggressive buying earlier, those 3 consecutive bullish candles, will now act as bearish order block, and now they are programmed, algorithmically, to set the stage for sell-side delivery. Our entry will be at returning price on the low of that 3 consecutive candles. Those candles weren't confirmation of bullish intent, they were part of the setup. They served a purpose: to engineer liquidity above prior highs and clear out short-term traders who were either early or uninformed. Now, with that structure shift in place, the narrative has flipped. We're not in a bullish environment anymore. Price is now in a delivery phase, targeting the sell side. And as ICT teaches, price doesn't move randomly, it delivers to a draw on liquidity. Always. So what's the draw now? We've got liquidity pools resting below relative equal lows, at 25321 and new day opening gap that price has magnetized to. That becomes our target. That's where price is likely heading, and as traders, our job is to anticipate that delivery, not react emotionally to it. Price has now returned to the 25,425 level on the futures, tapping precisely into our bearish order block. This wasn't just any random pullback, it was a calculated return to a point of premium, where smart money is active. That mitigation signals intent. And from here, I expect aggressive sell-side delivery to begin. The setup is complete, we had the buy-side sweep, the market structure shift, the retracement into a bearish OB, and now the algorithm is ready to expand lower. Sell-side liquidity is the draw, and this is where momentum will likely accelerate to take out inefficiencies and run stops below.